Good morning, everyone. Welcome to Windsor Brokers live daily market outlook for Tuesday, 6th of November 2012. Day D for America, election day, when we will have the verdict of the U.S. voters, who is going to be the next president, the current Barack Obama or a Republican challenger Mitt Romney. They are facing the verdict of U.S. voters today, after a long and bitter White House campaign, with polls showing them deadlocked in a race that will be decided in a handful of states where it is extraordinarily close. At least 120 million Americans are expected to vote on giving Obama a second term of replacing him with Romney, and their decision will set the country's course for 4 years on spending, taxes, healthcare, and foreign policy challenges like the rise of China and Iran's nuclear ambitions. So basically, the problems will remain there where they are. Just if the new face comes into the White House, it will be change of the president, but whatever is job to be done will be waiting for them. Of course, the America is still in the crisis, along with all the outside problems being involved in the conflict in Afghanistan, now currently in the Middle East and Iran. Not a very bright future for the new president. A lot of work, of course, to be done. Markets are on the sit and wait mode ahead of today's voting, with quite a muted trading scene after yesterday's close and overnight a session, with most of instruments holding within a narrow range. Of course, most of the investors are awaiting what will be the outcome of the elections to re-enter their positions. Overall, the positive tone for US dollar still persists, though some slight consolidative corrective action seen following a recent rally of the dollar and the slide of the counterpart currencies. Another important thing is the repeated 40-hour strike in Greece over austerity cuts, that was announced yesterday, as the Greek parliament is going to vote again tomorrow for the approval or rejection of the increased continuation of the austerity plan. As said, Greek workers started actually the 48-hour strike today, and they protest against the new round of austerity cuts that unions say will devastate the poor and drive a failing economy to collapse. The walkout called by Greece's two biggest labor organizations is the third a major strike in 2 months against the package of spending cuts and reforms that Prime Minister Samaras' government is trying to push through Parliament to unlock aid. Athens needs parliamentary approval for the package, which includes slashing pensions by as much as a quarter for some, and scrapping holiday bonuses to ensure that its European Union and International Monetary Fund lenders release more than 31 billion euros of aid, much of it aimed at shoring up banks. Another problem that keeps the single currency under pressure. It seems that Greece is becoming the endless problem for the European Union, and we'll see what will be the vote, because Greece is again running out of money. This is the endless story. Basically, it's again running out of money, and the failure to approve this next round of aid could have much stronger impact not only on Greece but also on the other members of European Union, as Spain is now on the shaky ground, along with Italy that is coming, and the Cyprus that is still negotiating with Troika about the potential aid, discussing basically the conditions and amounts to be given to the country to come out of the current quite difficult financial situation. Also today we have quite important things on the calendar. A series of services PMIs due to be released today. First of all, to mention that Bank of Australia raised its rates to 3.25% overnight. from surprisingly from forecasted 3%, pushing the Aussie dollar against greenback to the fresh highs at 104.36. This was the session high for today, and basically breaking above the recent congestion tops slightly above 104. We're going to take a look on the Aussie dollar in our technical part. From the Eurozone services PMI coming from Italy at 8.45. Before this, the consumer climate from Switzerland for October came along with the previous release in September at -17, despite some more pessimistic forecasts at -19. Set PMI start from Italy at 8.45. 44.5 unchanged the forecast for today, while Eurozone services PMI for October is due at 9 o'clock GMT and expected, according to the forecasts, to tick higher to 46.2 compared to 45 of the month of September. Production data from UK due at 9:30. Manufacturing production for September is expected, according to the forecast, to go up by 0.2% compared to draw of -1.10% in the October, while industrial production is seen weakening. A -0.6% is today's forecast compared to -0.5 in the month of September. Eurozone PPI comes at 10 o'clock GMT. 0.2% is the forecast versus 0.9% of the previous month. And along with the presidential and congressional elections, that will be the highlights of the day, the indicators that might trigger some movements in the markets. As said, the markets are still in the sit and wait mode. However, the renewed pressure on a single currency comes at the beginning of the European session, as the pair is basically currently attempting at the lower levels of the current consolidative range, and basically the lows of yesterday at 127.66 that has been so far retested. I don't know whether we see the screen or not. Not yet, so we're going to start. Okay, now you can see the screen. As said, brief consolidation at around 127.60, to 128 that capped the upside. This is the previous resistance now acting as previous strong support and base now acting as initial resistance, limiting the upside. I don't see much of the action until we have at least release of the Eurozone PMI and the PPI data, as well as more light to be given in the current situation on the preliminary release of the US elections. Until then, still more pressure seen on towards the downside, as near-term indicators are still in the negative territory, basically threatening a test of the downside supports at 127.60, which is the channel support, and it's also the low of previous lows of 10th and 11th of September. This is our next downside target, along with the 127.45. 18th, 19th of June 2012 lows. Pardon, I do apologize. The daily structure is still holding negative tone, as the MACD is now below its midline, and the recent break and close below 200 days moving average. Now it's opening a fresh bear phase following the congestion between 128 and 131.70. That was keeping the pair within the range. Now break below this range sees more focus towards the downside, with also 127.39 along with the previously mentioned levels Fibonacci support seen on the downside as the next target. So basically we have 127.60, 127.40 zone seen as the next target on acceleration towards the downside. Negative tone that dominates sees more potential towards the upside, while any corrective action so far has been capped by 128.00. Also we have a good barrier at 128.40. This is yesterday's high, and basically only break above this level would provide the temporary relief and probably to allow for some stronger recovery. Until then, more focus still seen towards the downside as negative sentiment sees the downside that drives the pair lower, sees the downside favored for now. Also, the sterling that basically broke above as shown on the that remains within the range of 159 and 161.70 zone. Weakened the near-term structure following a break below 160.00 and 159.74 lows, with immediate risk seen on a retest of range bottom and the key near-term support at 159.11. Low of 23rd of October 2012. Losses have so far been contained at 159.56, with brief bounce higher seen just as brief corrective action. And as long as the yesterday's high at 160, approximately 160.38, that is also equivalent to 38.2% retracement of the down leg from 161.74 to 159.62 stays intact. More focus seen towards the downside. Basically, the losses so far found a good barrier at 60.00, our initial resistance, and being capped so far there, with the fresh slide seen on the opening of European session, still keeping the more downside risk as the hourly indicators are starting to point lower again, and the 4-hour chart situation shows some signals of possible stronger corrective action due to oversold conditions. As we can see, the RSI is already above the oversold borderline and above 7 days moving average, while MACD is still well into the negative territory and still holding towards the downside along with the momentum. Some positive signals seen on the reversing stochastic, but again, mild correction to be expected according to the current structure, as bearish crossover of 20 over 55 days moving averages at 160.74 additionally pressures the downside. A break below 159.66, our initial, 159.56, our initial support is to open immediate target, and the near-term key near-term support at 159.11. This is the range floor, and also equivalent to 38.2% Fibonacci retracement of 152.67 to 163.08. Rally ahead of 90 and 200 days moving averages at 158.75 and 158.46 respectively, seen on a break below important 159.10, 159.00 support. The dollar yen so far found ground around 80 despite a brief break below 79.96 that basically increased risk of possible deeper reversal. So far the support was found. This is what we mentioned yesterday. 80.14, 80.00 was initial target, and ideally expected to contain dips. So far this scenario has been materialized, but of course we need to see the break above approximately 80, 30, 40. This is the congestion consolidative top of yesterday's trading, in order to then focus higher, as overall picture and bulls remain firmly in play despite being studies being quite stretched. Still the upside remains firmly in focus, while the weakening indicators on the hourly that already broke below the midlines, with the currently all pointing, starting to point higher, see potential of possible resumption of the uptrend from 77 zone. As said, we need to see the break of initial 80-20, where are the moving averages, and then 80-30 zone, in order to refocus 80.55 and 80.67, and resume the rally towards 81.00 next upside target. The main risk would be seen on the slide below 80.00. That will risk the test of 79.80 Fibonacci support, 61.8%, and the 79.50 zone, the recent lows of end of October. That will directly focus 79.27, higher low of 30th of October 2012, and basically this loss of this level would open way for deeper, pardon, I do apologize, reversal of the larger 77.94 to 80.67 rally. This marks also 50% retracement of the entire rally. So far, the dips are holding above 80.00. The support is reinforced by 55 days exponential moving average, and ideally reversal here and regain of 80.40 is to signal fresh strength of the dollar and a possible retest of 80.67 and resumption towards 81.00. The dollar Swiss hesitates around 94.55, 94.50 recent low highs, the highest level seen so far posted this morning, following a break above 94.36 previous tops and double top formation, seeing more potential now towards the upside as the daily studies are now pointing firmly higher and seeing a potential for test of Fibonacci resistance and round figure barrier at 95.00. From the other side, I do apologize. From the other side, the quite toppish and the appearance of sort of MACD bearish divergence as shown on the daily, on the hourly chart, still sees a risk of possible further congestion at this point and possible further easing before the bulls reassert. Still bullish structure is still intact, and if we see the break below 94.00 as our initial support at 93.85, 200 days moving average, then we might be talking about further weakening. Just possibly see this might signal possible further congestion and the consolidation around the 94.30, 94.50 zone before bulls before the bulls resume higher for test of 95.00. As said, only risk would be seen on loss of 94, 93.85. That will delay immediate bulls and open way for a further easing. Gold is in near-term corrective mode of yesterday's fresh low at 1672 with 1685, 1685-86 zone seen so far, hitting approximately 23.6% of the latest slide from 17, the downleg from 1726 to 1672. Hourly structure is gaining strength as indicators are at or above already the midlines, while 4-hour indicators are quite overextended. The RSI is now emerging out of the oversold territory with the MACD pointing higher, but overall bearish tone still sees this as a mild corrective action with the immediate barrier at 1693. 20 days exponential moving average and the previous lows at 1698, 1700 seen as a quite strong barrier, where also comes the descending bear trend line of 1795 yearly peak that is approximately at this zone 1702. So basically break above important psychological 17 barrier, and another one 1726 is to provide the relief and prevent the yellow metal from a further slide. Otherwise, a likely scenario would be a further extension lower as the pair dents initial and strong support zone between 1670 and 1630, denting 90 days moving average ahead of Fibonacci support 1668 and the 200 days moving average at 1663, break of which to focus downside levels at 1600 and 1590. Crude oil regained some ground following a recent slide, dipping as the losses dipped to 84.33 with the brief corrective action now being underway. Levels close to 86 being regained, 85, 88. We mentioned yesterday that 86 is actually the initial resistance, and the break above here is to provide the near-term relief and ease the current bear pressure. So far we have seen approximately 50% break above 86 and 86, 21, 61.8. Fibonacci retracement is to shift the near-term focus higher and keep the downside levels protected. However, overall negative tone despite some improvements seen on the hourly chart with the 4-hour indicator still holding in the negative territory and the firmly bearish daily structure sees the current bounce as corrective as long as 87.37 this is the peak of last week, and also the lows of previous lows at 87.67 and the 88.00 as Fibonacci resistance stay intact. Only break above 88 would provide relief and look for a stronger recovery. Otherwise, our immediate targets to the downside remain at initial one at 83.64, low of 10th of July 2012, and projection of the third wave at approximately 80.50 as a part of the larger down move of the crude oil from 100.72. And finally, we're going to take a look at the Aussie dollar following the recent action on the Australian Central Bank decision to increase the rates. The structure is still, I would say, negative, no clear trend, at least on the daily. As the pair is congested between 101.50 and 106.23. This is the major near-term range, with the near-term action being slightly skewed towards the upside as the pair broke above the lower range at top at 104, 10. Now looking for extension higher towards levels at approximately 104.70 and 105. On the hourly, quite extended conditions, they are already triggering some reversal as the RSI is now pointing, emerging out of the oversold territory, with the other indicators being overstretched, and the stochastic is reversing. 4-hour structure is turning positive now, gaining fresh strength from the latest rally, recent bounce of 103.30, low of 2nd of November, and the break above important 104.20 top, with further extension higher seen on sustained break to test 104.73 and 105.00. Daily structure is in a sort of improvement as MACD is now above the midline, and the price holds above 103.33, whereas the 200 days moving average still seeing room for upside extension towards 104.73 and 105. That might result in the test of the upper boundary of the past 3 months range at upper boundary in the top of the range at 106.2030 zone. That was all from my side for today. I do apologize. I have a bit of cough today and was not able to perform it perfectly. Your turn for questions and answers. If you have any, please, you can submit them now. Just thank you. Do we have any question? Just to remind you, keep an eye on today's PMI's releases, and of course more focus on the election. Caution is required as most of investors are now sitting and waiting what will be the final verdict of US voters, and then most likely then they will make their decisions whether for a further strength of the dollar or the major reversal. Since we have no questions for today, I would like to thank you all for coming, and expect to see you again tomorrow morning at the same time at 8:00. I believe we'll have some more news as we'll have some results from the US elections, and most likely we are going to see some more action in the markets. Until then, I wish you a nice day, and of course a very successful and profitable trading. Good luck.